back in 2024, 2023, a little bit light. 2024 already starting to rock and roll. We'll at least expose one of those coming up on the Rebel's Edge. Here we are. All right. I got my man Marc LoPresti with us. We're excited about the Rebel's Edge today. It is the full week this week, Marc. That's a little bit different than what we've been doing for the last month, it feels like. Feels like we've had 4-day weeks forever, but I think we're ready to rock and roll, aren't we?
We are. It's good to be back on with you, Pete. It was fun covering for you in the last week and change of 2023 when you were in an undisclosed tropical location. Your tan has not worn off. I, of course, will be heading in a few hours down to meet the other Najarian brother, the older and less better looking one. I'm talking, of course, of John Dr. J. We are speaking. We got back-to-back events for the next 6 or 7 days, Pete. We're going to be speaking at Sequire in San Juan at the beautiful Condado Vanderbilt for the next 3 days. Then Thursday morning, we jet up to Miami for Battlefin. Everybody that watches the show knows about that company. We'll be speaking there for a couple days. Then 361 Family Office Conference, Naples and Miami, and then back up to the frigid north for the LD Microcap Conference at beautiful Caesars Hotel in Atlantic City. Man, when I think where I want to be in February, I don't know about you, Pete, but my mind immediately goes to Atlantic City, New Jersey.
Of course. What else would you want?
Exactly.
Well, you guys got a busy couple of weeks coming up here, Marc. It's going to be exciting. I know you guys enjoy it too, actually. I mean, we all joke about it, but we all enjoy what we're doing, and it's a lot of fun. All right. Speaking of which, let's jump into the Rebel's Edge. I'm going to hit you up with the macro minute, Marc, and here's what I've got for you. I find it to be very, very interesting that as we start to measure things and we're looking for data, and all of a sudden we get some of the sentiment data that we've got. Wow, we're at record highs. Imagine that. And we've got a nice big leap when it comes to that sentiment, up 13%. That's what we heard about last week. So the markets, even though the first week, in my opinion, was taxes, now I think folks are back, and they're back in a big way, and they're feeling a lot more comfortable than probably many of those, at least those negative folks, thought when they got into 2024. What say you?
Yeah, well, listen, it's hard to disagree. That sentiment print, and we love sentiment data, whether it's consumer sentiment, trader, market sentiment, hedge fund sentiment, it's really, really important. It's part of what feeds those fear and greed indices that we also tend to watch and follow pretty carefully. And look, whether you say that the first month of the year or the first couple of weeks of the year was tax-related or a little bit of the air coming out of the balloon of the Santa Claus rally, whether it was capitulation around we're not going to get those rate cuts at the end of March as the futures told us in the second week of December, Pete. But, man, it just seems like the bulls want to stay in control. All-time highs again today. Let's see how long it can last.
It's the wonderful world of AI. Now we're going to jump to fantastic futures. And the fantastic futures I've got for you. Wow. There we go. Nice. Always fun. Let me tell you, I look at the price of crude. We talk about it all the time, Marc, but energy is such a big factor, and we obviously have to focus on that as much as it deserves, and I think it deserves a lot. But I'm looking at the price of crude moving up a lot closer and near that 75 area, somewhere close, either up or down from 75. But I'm also looking at nat gas, which is down today again. And it was up there at what, 330, I think, maybe 336. Here we are now trading at about 240, and it's down another 5% today to get there. Nat gas going in one direction. We've got crude going in the other, and energy's very, very interesting part of the markets right now. So that's where I go with my futures. What about you?
Yeah, listen, I mean, nat gas at some point's got to find a bottom, right? I mean, so far I've gotten this winter wrong. Folks that watch the show regularly going into the fall, the late fall, we talked a lot about how the El Nino effect was going to do what El Nino does, which is warmer than weather, but a lot of precipitation in the form of rain, but not snow. Pete, I can tell you, if I tilted the camera out my window, there is still snow and ice all over the damn place here in the Northeast. And yet, nat gas not catching up or seeming to catch a break. I think that's about reserves, less so than demand. And when it comes to crude, buckle up, Buttercup. The volatility is going to continue. whether it's the Houthis or stuff out of Iran or comments from the Russians or whatever OPEC's going to decide to do at the next meeting. I don't think that we've seen the end of volatility in oil. I think we're going to see continued movement to the upside. And our next topic is actually going to impact that supply-demand story, which also tends to imply directionality for oil going in that direction.
And what Mark is talking about is something we teased before the show as well. We're talking about NuStar and what's going on with NuStar Energy. I'll tell you what's going on. We got Sunoco coming in and saying, hey, you know what? We like what you guys do. We really think it's great. We're going to get improved free cash flow. We've got a company that's given out about an 8.8% dividend yield. I mean, there's a lot of different factors going in. It's going to be an all-stock transaction. M&A is back, Mark. I can't tell you, but how much we've seen already this year, whether it's in the healthcare world, it's now in the energy space. I think it's going to be all over the place. And a lot of that having to do with where people think rates are going to be going. And if we see those rates getting cut and we start to see that in the latter part of the year, it could be a big year for M&A, which also could help out somebody like Goldman Sachs. But as far as NuStar, this is a big move. It's not only a 52-week high, it's a 4-year high. And this is going to be a really interesting transaction. What do you think about this one?
Yeah, listen, we've been watching this carefully, and John and I covered this pretty extensively in the run-up to the holidays, specifically covering the Chevron Hess deal. That, of course, a $60 billion deal. Exxon buying Pioneer, the biggest M&A deal of 2023 in the oil and gas business. And it's a combination of things, Pete. Number one, these big oil and gas concerns are sitting on a lot of cash, right? We know that. So their M&A capabilities are less impacted by the directionality of interest rates. Having said that, they are also the first to step into the M&A floor where interest rates seem to finally be coming down. Not March, end of June. You know, I've been saying end of June for like 6 months or so now. I don't get everything right, but that one I seem to have gotten right. And so John and I talked about this quite a bit, that we saw first energy, particularly upstream oil, leading the charge in M&A activity in 2024, secondarily healthcare, although what happened with the healthcare names last week, restating earnings on the heels of underestimating what the demand for elective inpatient procedures was, and of course we all know what happened last week with those names, has me wonder if the M&A roller coaster can continue the ride in a positive way, but we're going to see more M&A in oil and gas, particularly in the upstream sector. Stay tuned for it.
I agree with you full-heartedly. I absolutely think that you're right on that one, dead right on that one. Gilead Sciences. This is one of those, Mark, where it is a monster company. They've got an incredible pipeline. As a matter of fact, they've got 61 trials going on right now. And you start to look out and you say, okay, phase 2, you got 28. Phase 3, you've got 19. They're doing everything from HIV to cancer to lung to gastro, you name it, they're there, right? I mean, this is a major company, but they've got a few issues going on right now. And the main primary issue is they've got a drug for cancer that doesn't seem to be any better than what's already out there. And that's a problem because they spend millions, folks, and sometimes close to billions in some of these drugs, trying to get them all the way through from phase 3 to 2 to 1 and getting all the way through. And unfortunately, in this case, it was disappointing that what they got back. And that's why the stock's getting hit down 10%, down wherever, call it 10, 11%, but it's trading around $79. Mark, this is a company I know pretty well. They have been kind of stuck in a range for a really long time. And then you see some of the others, like a Merck, and some of these names that have been ripping to the upside. Merck today looking right at the 52-week highs and looks like it's ready to maybe break through there. But Gilead just continues to have these struggles, and it's becoming a problem.
It is, but this, as you point out, Pete, this is a major name that's got lots of drugs that are already out, that are post-clinical, that are late phase 2 or phase 3. This is not one of these smaller cap 1 or 2 hit wonders where if they don't get to phase 3 for the one major drug that they've got in the pipeline, it's kind of lights out. So I don't know. You know this name better than I do. You might look to consider buying it. Is it close to the 52 low at these levels?
It's relatively close. 52-week low is about 72. That's trading last I looked around 79. So it's a little bit above that still. You know, it's just not really been the great performer. It's great company in a lot of ways, but even when everything seems to be going their way, they don't make the kinds of moves that we see in some of the other names, like a Merck, maybe it's a Bristol Myers, whatever you might want to pick out, Eli Lilly. It just doesn't seem to keep up with those names, and I can't explain why. But it's been something that's been going on for multiple years for sure.
Interesting.
All right, we're going to jump to Archer Daniels Midland. Now, here's one, Mark, that's pretty daggone interesting. I mean, with your background and all, you tell me if there ought to be a little bit of concern here. The stock is at 52-week lows today, down about 20% or something like that. Why is that? And we all kind of ask that question. Well, turns out the CFO has some issues and they've put him on leave. And outside of that, which is already bad enough, that's going to cause the Q4 earnings to be delayed. That's a big problem, Mark. And this is something that ADM's not going to be very happy with. And even though they've got somebody that they've put in the slot to run the show now, this could be a problem for an extended period of time. What do you think about this one? Is it something where you say, you know what, once that's cleaned up, it could run? So you start looking at it? Or do you say, I'm going to back off for quite a while on this one?
Well, listen, in terms of timing, I'm definitely going to back off until we learn more, right? It's never a good situation where they say, hey, it's not like the CMO or the director of HR or some, it's the chief freaking financial officer. I'm going to add an F to that. It's a CFFO from now on the Rebel's Edge. And if you start talking about adjusting Q4, the next question is, are they going to start restating 2, 3, and 1 of last year? Stocks, typically speaking, you can pretty much guarantee, folks, when companies restate earnings previously announced, stocks get whacked. It's going to make today's downside pressure look like a walk in the park. Now, what's interesting on this one, Pete, is how commodities performed. Archer Daniels Midland, one of the biggest concerns in the softs, right? Wheat, corn, things that go into what we eat every day. Those things tend to go up when a rate cut is really sort of defined, right? And I think we're getting to that point. Futures currently showing 50% or less for March. I think it should be 0 at this point, and in the 80s and going higher for June. When that happens, traditionally speaking, commodities, particularly softs, go higher. So you might say, well, this thing's really maybe getting beat up more than it should be, and it will experience some upside trajectory on a commodities bump. But man, not until I learn more about what kind of chicanery or effery, I won't use the actual word that I like, went on in the CFO's office. That is just not good news.
Yeah, that is not good news. And it's one of those that I agree with you. I think you can be conservative enough to say, you know what, I'm going to back off for a while. I don't need to ever buy the bottoms of these things either, Mark. I mean, neither do you. We talk about this type of thing a lot. Sometimes you need a turn and a real turn. And I think that's what I'd be waiting for in ADM. All right, lastly, Upstart. Now, this one's pretty interesting because we talk about AI all the time. It's been a huge influence on the markets. Meta really absolutely threw fuel on the fire last week, talking about NVIDIA, talking about the billions of dollars on chips they were willing to spend for this whole AI world. We talk about Apple. Why does Apple keep on running to the upside? AI. Everybody seems to be leaning on AI. Well, Upstart, they're pretty optimistic about the AI in the lending space. And a lot of people are kind of joining in on that whole thing. That being said, it's still a name that's been all over the map, Mark. It's never really had a great path. It's just everywhere. It can run, it can fall back. One of the things that's causing the run, in my opinion, is the amazing amount of short interest it's got. 35 to 40% of this stock is short. So could you get a squeeze to the upside? Absolutely. Have we seen that? Absolutely. Will it continue? I don't know. Because those shorts can sometimes say, well, you know what? Let's get back in there and start pushing this thing down even further again because of this. So for right now, Mark, I'm sort of stepping away. We did have some call buying in there today, but wasn't huge, and they were looking for something relatively short time. So they weren't going out and saying, hey, look, we're going to June. We're going to buy these calls. We think this stock is really starting to head to the upside. This was more of a short term. We think this thing can bump up a little bit because of those shorts.
I'm going to take a slightly more bullish and optimistic view of this one, Pete. I mean, and it's not just because it's AI and it's not just because it's data, it's enterprise AI. And as we've said, and we will continue to say, 2024 is not just going to be the year of AI, it's the year of enterprise AI, business to business, SaaS-based AI, where corporations are using artificial intelligence and machine learning, large language models, to make better, faster, more informed decisions. It's not just about, will Chat GPT and search kill Google's advertising business, although that gets 90% of the media time when we talk about artificial intelligence. And this is enterprise SaaS B2B AI in a space that it's really needed. So they actually provide banks and non-traditional lending platforms, think like our friends at Klarna, Affirm, the Buy Now, Pay Laters, folks like that, to give underwriting data to those lenders based on non-traditional sources. So throw out your FICO score, your credit score, and all that. They're looking at all kinds of stuff like, do I keep my smartphone charged at all times to determine a person's creditworthiness? I submit, Pete, that at a time when we have all-time consumer credit card debt, we are ringing the bell every time that number comes out, goes higher and higher. You saw some of the banks that reported last week setting aside larger reserves for charge-offs. The demand for what this company does is only going to increase. Can they shake off the shorts? We'll see.
Yep. Could be interesting. And that is a big amount of short interest. I don't remember seeing this quite like that, Mark, except going back maybe to AMC, some of those back in those days when we were looking at that and it was kind of crazy, and meme stocks, all the rest of it. We're going to hit a little bit of sports. How about this? We are now down to the magnificent 4 when it comes to the NFL, right? We got through all the games yesterday, some great games. And here's just a real quick recap of each of the 4 games. The Ravens, why did they win? They rushed for 229 yards. Houston had 38. Green Bay had 2 turnovers. San Francisco had none. San Francisco won the game. You've got the Lions. They had 0 turnovers. Tampa had 2. That's why the Lions won the game. These were very close games. The Bills dominated everything. The only problem the Bills had was they've had this curse mark for a really, really long time about kicking and trying to get that ball through the uprights. And you had a kicker who is basically lock, stock, and barrel. He's going to put it right through, and he did not. They also had a couple of drops that were really bad from one of the best quarterbacks, if not the best quarterback in the game right now. Josh Allen looked unbelievable. He runs the ball. He can do just about everything. He's a guy who doesn't mind a little bit of contact, which is different for a quarterback. And obviously GMs don't like that very much. But so now we're down to Kansas City and Baltimore, Mark. So I'm going to give this to you. Kansas City, Baltimore, who wins the game and why?
Baltimore.
I'm with you. And I'll tell you why.
That's an easy one.
I got one word for why. Lamar. That's all I got to say on that one. Lions and 49ers. Who do you like in that one?
That's a tougher one, John, because these are Pete, pardon me, because these are 2 teams. I know. We'll edit that out in post. It's a live show. That's a tougher one because these are 2 teams that I really don't have a terribly high regard for. Although I should probably shut up because any of the teams that I cared about are basically done for the rest until the springtime. But I guess if I had to, that's going to be a toss-up. 49ers.
I'm with you. The 49ers were most of this season the best team in the NFC, in my opinion. And the only thing that changed a little bit was that's shocking. Their defense showed a little bit of holes in them, I felt like, against Green Bay. Green Bay ran the ball really well against them, which is not something teams usually do. And that kind of surprised me. And, oh, by the way, you got 2 really good running backs playing for the Detroit Lions. When the world tells you that running backs don't matter, Mark, you need to tell these guys, hey, look, this isn't baseball. This is not money ball. Running backs actually do matter. And if you look at every one of the last 8, or if you want to look at the last 16 teams in the NFL for playoffs, all you got to do is say, okay, who are the top 16 running backs in football? Because they were the ones in the playoffs. I mean, it
correlates very highly. Well, although the strength or relative weakness of the defensive line, I think, was a theme that we saw through a big part of the regular season, certainly in the AFC.
Yeah, for sure. All right, next, we're going to do one other one, and it's going to be in the NFL again. So you've got free agency coming up. You've got the combine coming up. But most importantly, you got the draft coming up after all of that. And that's all the way out to May. But the NFL is 24/7, 365 days a year, Mark. So we know that. So here's a question for you. John's the one guy who's a Chicago guy, right? He played for the Bears. He still has a home in Chicago or two. And the guy absolutely breathes, breathes, and everything, Chicago Bears. They have the 1st and the 9th pick in the draft this year in the 1st round. If you are the GM of the Chicago Bears, do you keep that number 1 pick and pick whomever it is that you're looking and you just think is deserving? Or do you trade it down, Mark, and maybe get 2 picks? Probably not 2 in the 1st, but you might get 1 in the 1st this year, maybe 1 in the 1st next year. Who knows? But something like that. Would you do something like that if you were the GM of the Chicago Bears?
Listen, it totally depends on who's on my hot list and how bad I want them, right?
Mm-hmm.
I mean, it's really fascinating to me to watch. And we actually covered the combine and the draft a couple of years ago from a data perspective with Battlefin, which was a whole lot of fun. The draft actually being the most watched television other than the Super Bowl. A lot of people actually don't know that. But watching how these GMs use and parlay that currency in terms of where their picks lie is always fascinating to me. I don't know, because I don't know what our beloved Chicago GM has in mind in terms of what his Christmas list was or is. So it'll be very interesting to see how that plays out. But I always find it fascinating when they give up that number 1 slot and either trade down to get a couple more or swap it out.
I think the biggest mistakes that I've seen GMs make is trading up. I think some of the better moves have been trading down and getting more of what you might need. As long as it's a quality draft, you've got the guys that you want. And I think when I look at the Bears, I actually like Justin Fields. I think he's a heck of a quarterback. A lot of people don't, so they think that they should stay there and take Caleb Williams from USC. I completely disagree with that one. But I was going back and just trying to see, what does it really mean in the draft when you trade down, or if you're the opposite side, trading up? I looked at what they did to get Jared Goff at the Rams the year that he came out, and he was the 1st pick in the entire draft. And Mark, you would be shocked. Go back and look at that one. You can understand why there are some teams out there that they have a moment in time where they're good, but then they've got multiple years where they slip because they don't have any picks left. you know, so you're damned if you do and damned if you don't. But I think in the case of the Bears, I would trade down. I would love to get a couple of picks in the 1st round. You keep that 9th pick. Maybe you go a little bit further down to get something else, and maybe it's something you really need. But I've got a lot of opinions on that, and I've actually even got a lot of conversations in my it's still coming up this offseason or whatever about football in the NFL. So we'll see how that all goes too.
Who's at the top of the list, Pete? Who's at the top of the list?
For me or the draft?
if you, I'll turn it back to you. If you were that GM of the Bears, what would you do? How would you use that currency, and who are you going after?
I absolutely would trade down. I don't like Caleb Williams that much. I think that he's a bit overrated, and against the quality of competition they had in the Pac-12 defensive backs, I don't think it really showed who he was. I actually think there are some quarterbacks, Mark, that are a little bit lower right now. When you look at the draft, they're probably rated like the guy from Oregon, Bo Nix. He's now scheduled to be the number 31 pick in the draft. That's, if you believe these numbers.
Wow.
I think he's much better than that. So if I got out of 1st and I got down to like 15, 16, and I've already got number 9 pick, I'm going to use the number 9 pick on probably an offensive lineman because they're really deep with really good players. And then I'm going to take Bo Nix, and I'm going to have a guy who's got the fastest release in college football and the most, the highest percentage completion in all of college football. But for whatever reason, he's like ranked number 31 pick in the draft and number 4 or 5 in the quarterback part of it. And yet they've got some of these other guys in front of him that, in my opinion, don't have the quality that he's got. But there's a lot of things there, Mark. There's a lot to unpack. And it's a lot of fun kicking around football stuff because it's something we can do 365 days a year. It's crazy. I mean, it's truly crazy. And free agency is right around the corner. So we'll be reading about that pretty soon and seeing who's going where. Mark, really great to have you with us. Always is great. A lot of fun. We have a lot of good stuff. I tell you what, I think we're going to see more M&A. I think that's going to really start picking up as we get deeper into 24. We're just barely into it, but I think that's going to be something that everybody ought to keep note of. That's going to be happening. Mark, thanks a lot. And folks, we'll see you tomorrow at 1 p.m. on the Rebel's Edge.